All traders are looking for ways to find good opportunities in the market. One way is with relative strength, and our guest today is Joe Fahmy. He's here to talk about how he uses it to find the big winners. So, Joe, talk about how you use relative strength.
My definition of relative strength, it's not RSI, it's not an indicator. I just use a simple definition. Relative to the market, stocks showing strength. It's about as simple as it gets. And what I mean by that is when we have corrections, strong stocks stick out like a sore thumb. So going back, I've been trading 16 years, going back to corrections from 97 and 98, 2000, all the way up to recent corrections, 2009, 2011. When the market corrects, there's always stocks that are holding up. I like to think of it as a spring, so that the market is holding these stocks down, and as soon as the tension is relieved off the market, these stocks can go on to become big winners. So that's how I use relative strength.
All right, is it an actual line on a chart or a number you're watching, or you're just monitoring the stock going up as the market is coming down?
I'm paying attention during corrections. It's a very good question because people say, okay, how do you find this? And I hate to sound so simple saying this, I just pay attention. In other words, if you have 3 stocks that are $50 and the market goes into a correction, one could be down at 40, one could be down at 30, and one of them is just sitting there at $50. And so a light bulb should go off and you should say, wow, this is the market just got killed here and the stock's not even budging. In other words, it's not the smaller guys who are controlling the markets. It's the bigger guys who are controlling the markets, the big hedge funds and mutual funds and pension funds. They're buying hundreds of thousands, if not millions of shares. And they have a huge luxury that the individual investor doesn't have, which are teams of analysts that can go out and do their due diligence and really tell if something is going to be a big winner. So they usually won't sell those shares during the corrections, and that really shows when you just notice the market's in a correction, whether it's a 2 or 3 day pullback, a 2 or 3 month pullback, or a longer 9-month bear market, that you can really see stocks that are holding up, again, relative to the market showing strength.
Do you do this intraday as well? I mean, could you have a market down for the day?
That's a very good point. No matter what your time frame is, if you're a day trader, a swing trader, or a long-term investor, you can use this on multiple time frames. So intraday, for example, some news will come out. This happened a couple years ago. A news came out of a subway bombing in London, and the Dow gaps down 200 points. When the dust settles and it's a knee-jerk reaction and people say, okay, this is an isolated event, it's not going to affect our economy, what happens is, let's say you have 30 stocks on your watch list and the market's down and everything's red. What I like to pay attention to are the ones that are turning green first on the day, because if the 200 points intraday didn't weigh them down, as soon as the market, if you feel it's coming back, trade the ones that are turning green first on your screen. If you feel the market's coming back, that's how you can use it on a day trading environment.
All right, so you said just as they turn green. I mean, do you wait a few minutes to make sure that it's confirming that, or you try to get in as soon as possible?
Well, if you're a day trader, I'd like to think you have some sort of technical intraday patterns that you look for, whether it's your short-term 1-minute, 5-minute charts, or I don't do that much day trading, but it's you want to buy it off of some sort of sound place where you have a safe entry, where you have a logical stop. So you could just blindly buy them as they turn green, and then when they turn back red, it could be your stop, or move your stop to break even or something. But you want to see the ones, even on an intraday basis, showing strength relative to a down market.
Joe, thanks for your time.
Thank you, Tim.
You're watching the MoneyShow.com video network.